Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
So today we're going to do an update to the Las Vegas real estate market. We're going to focus on condos on this one. The next one we do will be on single-family residential homes. Juana, why do we break the market out into segments like this?
Well, for a couple of reasons. First of all, they're different price points.
Okay.
Second, they're generally a different buyer.
Okay.
Okay, because single-family homes have a much broader price range than condos in the Las Vegas market. We do have some high-end condos, but for the most part, they tend to be on the lower end.
Okay. Perfect. All right. So we're going to start with the first slide, Market Action Index. Now, this is that needle. It's a summary of a whole bunch of information. As you can see, the Market Action Index right now is 36. It's up from 34 last month. That's pretty substantial. It's about 7 or 8% increase in Market Action Index. We're still in the seller's market, but very, very clear near that buyer market area. But it's sort of a slight, and it even says our slight seller's advantage. Now you're probably saying, well, what does this mean? Like, what does that mean historically? Like, how does that compare to what it was maybe, I don't know, a couple years ago? Well, if we're going to look here at the next slide, this is the Market Action Index history. Now, this only goes back 3 years. I can't go back more than this because this site doesn't allow me to do it, that we use. But if you go back all the way to the left, you can see that's a normal market. 40 is kind of a normal market. But even in January 31st of 2020, which was before COVID, it was still a normal market, right? The top tier was 40 and the bottom tier was like 29, right? Today, if you go, and then if you see in the middle of those humps, that was the super crazy buying when people were buying like crazy. Well, we've gone back to a normal market, and actually the range of that is like 34 to 44. It's way over. So actually, we have a hotter market today for sellers than we did 3 years ago before the pandemic for condos. Right?
So did you expect that?
Did you expect that? You probably expected it to tank and be much worse. Now, what people are focusing on is that big hump in January. That's what everyone's commenting on the videos. Oh, but Todd, since last January or last July, oh my gosh, the sales are down, 33% down. That's terrible. Yeah, but that was the hottest market ever. If you can compare any normal market to the hottest market ever, it's going to look like it's down. But when you look in retrospect and step back, you realize we started to go back to normal market, but look what's happening. We're taking off again.
So kind of think of it this way. Think about what a couple looks like on their wedding day. They're all dressed up. They've got all their makeup on and all that. That was the hump. And the rest of it is just normal life, people living their lives. And that's what the rest of the market is like.
Okay. The next one we're going to show you, which is one of the inputs to the Market Action Index, is the median list price of new listings. Mm-hmm. This is different from the median list price of all listings. Why is it different? Why are there differences?
So new listings, they're the new shiny, right? And they tend to tell us where the market's going, right? So let's see what you got.
Okay. So the new listings that came on the market in November, as a matter of fact, the exact date was November 18th. The median price was $239.5. The median listing of prices today is $260. That's the median. So of all the things that came on the market, this has definitely bounced around a bit, but you can see that it is higher than it was in November. We did say there would be a 4-month window when we thought it would be a good time to get a deal as a buyer because you would have more choices and the home prices were lower. I apologize for you if you didn't pay attention and you missed it because it's going to get worse moving forward. Not saying it's a good time to buy. I don't care if you're going to buy. We don't represent buyers. So if you want to buy a condo, you should have bought it a couple months ago. That's all I have to say about that. Okay. The other thing we look at is median list price. Now, median list price here, I have this chart. As you can see, median list price has done nothing. You can see it goes up, it goes down, it goes up, it goes down. It does this every year, right? Mm-hmm. Because that's how it normally goes. You can see it did the same thing this year. It went up and it went down. But what's interesting is the 7-day average and the 90-day average. Now, Juana, why is the 7-day average, what is that?
That's what's happening right now. It's a moment in time, so to speak.
Okay.
But the 90-day average tells us, a little bit more about what's been happening. So when the 7-day average is higher than the 90-day average,
yep,
then that tells us where the market is going.
The 7-day average is 269. The 90-day average, because remember, this is way more homes. You're looking at much more data, is 267.9. So even though it's a little bit above, it's above.
Right.
So we expect that trend probably to continue.
Which we've said because we are approaching the spring buying season when buyers come back to market, and inventory has not climbed. So long as inventory doesn't climb, buyers have few choices, and that means that they'll be competing with one another for the few choices that are on the market.
Okay, the next slide, speaking of inventory, is inventory slide. Now, when you look at this thing, you see that blue line going downward because inventory is declining. It's substantial, just like with homes in Las Vegas. We've lost about 2,000 homes out of the MLS in the last 2 months, right? It's shrinking. Same thing is happening in the condo market. Yes, if you go back a year ago, we had an extremely low number, hottest market ever. But if you go back just a couple years ago, which was still a pretty hot market, we had more homes on the market than we do today. And you can see what's going on here, where this is heading.
Absolutely. So what we're looking at is that the inventory is impacting the prices, and it's impacting prices to the benefit of sellers.
Benefit of seller. So if you're a seller and you held on to your house, you didn't dump it because you freaked out, the worst thing you could have done was sold your condo because you thought the market was going to tank and you were going to sell it. The next thing we have, which is very, very nice slide here, this is price per square foot. Now, what I did was I drew a little red line in here. Now, as you can see, the price per square foot every year, if you go all the way back to the left where it was $175 bucks a foot, it was going up. And then what does it do in this fall? It falls a little bit. Then it goes up, and then it falls a little bit. Now, this was a big year because of the way the buying spree and then interest rates went up. So it did the same thing it always did, just did a bigger thing. But notice, it didn't crash. It's adjusted back to still appreciation. If you look at that red line, it's still going up. A year ago today, the median price was about 226, and today it's above 240.
So
it's about 240. So condo prices are still up substantially year over year. And we already talked about how the 7-day average is flipped. This thing is going to do what it does every year. It's going to start appreciating, increase, most likely, not saying home prices are going to go up, saying most likely the trend is showing it's likely to increase in the spring. Why does it increase in the spring?
Because buyers come back and they are looking for homes, because this is the time when everybody's trying to get set up for school because they want their kids to go to whatever school in the fall. They're done with the holidays. Maybe they have their tax refund. Maybe they've looked at how much money they've spent on rent, and they would like to pay their own mortgages as opposed to their landlord's mortgage. Whatever their reason is, we do tend to have more transactions happen in the spring than any other time of the year.
And if you're one of those people who didn't buy a condo last January because you thought you'll just wait till the market crashes and you could buy it for 40 or 50% less, well, the problem is, congratulations, you should go buy it now because it's only about 10% more than it was last year. Yes, it did decline from June, but we've talked about June. That was super artificial. That was not sustainable. We never said it was sustainable. We said this thing would correct. It's done exactly what we said it would do.
There we go.
Now, but whenever we show data like this, somebody's going to come out and point out, oh my gosh, but interest rates, they're 6% now, like 6%. Nobody can afford a house at 6%.
Well, for most of our adult life, everybody would have been happy with 6%.
Thrilled, more is the better word. What about this market, specifically condos? And we do see people, we just put a condo under contract.
Right.
They did financing.
Yeah.
They're getting a loan.
They are.
They can afford it somehow.
So look, sometimes people can't afford not to because they're paying rent and they're not getting any benefit. They want stability. They want a tax write-off, whatever it is that makes them want to purchase. This is happening for them. And when they find the right place that suits their needs and they can afford it, then people buy it.
Yeah. So anyway, this was just a quick update we want to do. We grabbed the condo numbers in about a week or so, probably the end of January. We'll just grab the housing numbers. They're following the same pattern. They've been different because and we'll go over this, we do the housing thing. The high end of the housing market has sucked and the low end of the housing market's doing really well, which is why on our videos, we break out the quarters of the market, not just throw out a general number and try to make a big deal about it to get a bunch of YouTube clicks. Because sometimes it's unfair when your average person who doesn't own a $1.5 million house in Summerlin, right? is trying to make a buying decision on this $400,000 house that they want to buy somewhere in, you know, in Summerlin maybe. And they're like, or in Henderson or some other part or east side of town or whatever. And they're trying to decide, should I buy now? Or we're not telling you to buy now. We've never said you should buy now. We honestly don't care if you buy now. But you should have the data. You should understand what's going on in not just the whole market, but in the segments of the market. Why is that important?
Because the different segments of the market behave differently. So you might have one segment of the market that is hot and one that is cold, and that's not that unusual. And you have to know where you are and what you're purchasing so that you can understand whether this makes sense for you and your situation or not. So if this video was interesting, if you learned something, if we entertained you, if we amused you, and I know some of you guys are laughing, please subscribe, hit the notification bell, like the video, share the video, leave us a note. Tell us what you think. Tell us what's happening in your market. Every market is different. And even in Las Vegas, we'll do this. We've got this really cool appreciation map that I keep wanting to do a video on. So we'll have to do that soon. And to show you how, you know, real estate is very hyperlocal. And we've talked about this before. Even, you know, one block over, prices might be considerably different. So it's interesting to find out where everybody's watching from. Please leave us comments. Be nice to each other in the comments. And we'll see you on the next video. Bye.
Bye.